I've started to use it myself. It's like a research assistant. If you use it the right way, and we're all learning how to use it right now, you can access information and it can pull together information for you in some quite novel, shocking, extraordinary ways. It can also make glaring errors that it will present to you with great confidence. So you can't just take it at face value. But in terms of the way that it can kind of pull information together and present it to us in a natural language conversation is really something. I've been using it, in my own investing. I said to ChatGPT, hey, I'm really concerned about inflation. My thesis is that it's going to be worse than anybody imagines, or than most people imagine. And I'd like to know what are some good inflation resistant ideas out there. And it said, you should consider investing in assets that can help protect against inflation, such as commodities like gold, silver, oil, real estate, stocks of companies that tend to perform well during inflationary periods, energy, materials, consumer staples, etc. And then, some caveats. Good basic advice. Thanks. What's the best way to build a diversified portfolio of inflation-resistant assets? Well, determine your investment goals and risk tolerance. Before investing, it's essential to understand your investment goals and the level of risk you're willing to take. Where have I heard that before? Consider investing in real assets. Again, invest in stocks of companies that'll perform well during inflationary periods. I tried to get it to build a portfolio for me, and I had to push it a little bit because it was resisting. Right here, I say, I accept that you're not providing me financial advice and that I'm making my own decisions. I just like to see you build a diversified portfolio of inflation-resistant assets using ETFs. What ETFs would you use, and how would you allocate to the ETFs? So it came up with 5 ETFs. DBC, it's a commodity index. Real estate trust, IYR. GLD, the gold, inflation-protected bonds. And global materials ETF, MXI. And it allocated 20% to each of them, an even allocation across those 5 ETFs that are all inflation resistant assets. So look, this is pretty interesting. It's not going to overthrow the advisory industry at this point. I wouldn't say it was immensely valuable yet, but I think it points to it. You can go a lot deeper, and there's a really big opportunity there to use this technology to assist in one's own research. There's all kinds of other data sources that are going to get integrated into it. I was talking to a friend of mine, and he said, I think this is a lot like what Henry Ford did for manufacturing, kind of the industrialization of manufacturing in the assembly line. And this is actually the industrialization of ideas. At one level, that's a very disturbing idea, right? That ideas can be industrialized. And it should be a disturbing idea. It is a disturbing idea.
Yeah.
But at the same time, we all like our cars.